Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hello, everyone. Welcome to episode 74 of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, we're going to title this one, "It is an NVIDIA world. We are just living in it." Obviously, NVIDIA is the stock of the hour, as they say.
Speaking of NVIDIA, just a quick question. Are you a gamer?
No, I'm not. I am not. I was at a younger age, I guess, but I've said this, I think I've said on this very podcast before, like my kids have a green light account, gave them a little bit of money. They can buy some stocks. Like literally like 2 years ago, both my boys are buying NVIDIA. I didn't even know what it was. And they're up like a lot. Not a recommendation, but I'm like, man, I should be listening to these guys. I told them, see, that's real life. You know, look what your friends are doing. Go to the mall. What's popular? Those are the things you want to invest in. And they say, yeah, Dad, we knew about NVIDIA because it's all the games we play. So there you go. And now it's taken over the world. I will say right before we started, I was running around chasing my dog, Walter. Talked about him before, my Great Pyrenees. Couldn't find him. He's outside. I'm running around looking for him. Now I've got him down here and he's snoring like 10 feet away from me. So you don't hear the guy, do you? Do you, Sony?
No. I envy him now. It's like taking a nap at 9 a.m. or 10 a.m. Eastern time.
I don't even know if this is a nap. The dog sleeps 21 hours a day, so I don't know what you call that. But no, it's fine. Nice. It's what he does. He lives a good life. So, all right, so Sona, we're gonna have a lot of fun today. I will say, welcome to probably, in all likelihood, a lot of new listeners. We'll get into kind of why we have so many new listeners. I was in New York last week and did something. We'll talk about that soon, but we know there's a lot of new listeners. So no pressure, Sonu. It's good. Hopefully not one and done.
Make it good.
Let's impress some people here today. So we are going to start things off, talk about NVIDIA and just the stock market in general. There's some worry, again, that there's only a couple stocks going higher. We're going to push back on that a little bit. We're also going to talk about my trip to New York last week, and we're going to finish things up with the Warren Buffett letter. Sonu, you did some amazing work on, we'll talk maybe briefly about their earnings. Really, it's just the letter and the wisdom that comes from Warren Buffett. Then a discussion about Japan. Remember, Mr. Buffett was buying Japan several years ago when people looked a little odd at that decision. And now the Nikkei literally is making all-time highs. So come up full circle. All right, so let's get into it again. It's an NVIDIA world. By the way, this is episode 74, sponsored by our friends at YChart. So thank you to YChart for sponsoring today's episode. Let's start with NVIDIA, Sonu. I mean, we've had, 4 or 5 nights to sleep on it. I'm still amazed. I mean, I've got stats. You've got stats.
Me too.
How about this? Let's go this route. What's the one thing 3 or 4 days later that still amazes you about that earnings call or just the reaction to the earnings? Whatever you want. Take it away.
I mean, just a year ago, this is the previous year, their sales were running at $6 billion, which is a big deal. Like, that's good by itself.
Sounds like a lot. Yeah.
Yeah. This year, the latest quarter that ended, $22 billion. That's more than 3 times. That's massive. I mean, it's just unbelievable just in 1 year. Now, you're always looking for analogies, right? I think Barron's, to steal something from them, it feels like a gold rush, right? Now, in a gold rush, you think, okay, everyone's out there looking for gold. And I think that's what AI is right now. Okay, what's the AI story? And then NVIDIA, you bring NVIDIA into the picture. What is NVIDIA doing? It feels like they're selling shovels in a gold rush. Yeah. Who makes money during a gold rush? It's the person selling the shovels.
Wow. No, that's true. I mean, on the day, the stock on the day. So I guess this would have been what, Friday? Yeah, on Friday, or was it Thursday night? What day was earnings?
It was Wednesday night, right. And Thursday was the big day.
So Thursday's reaction, stock up almost 16%. The stock gained approximately $277 billion, which is like more than Coke. Just put that in perspective. Previous record was $197 billion set by Facebook, just as previous February. What shocked me, you look at their revenue, and you kind of talked about this. Their revenue is up 265% year over year. Put that in context. Meta, 25%, Microsoft, 18%, Amazon, 14%, Google, 13%, Netflix, 12%. See where I'm going with this. AMD, 10%, S&P, 5% revenue growth last quarter. Tesla, 3%, Apple, 2%. I mean, Apple's 2% growth. NVIDIA is 275. I mean, that is just unbelievable. It doesn't feel like it's slowing down. I made a quote to the media. It's a playful quote, yes, but death, taxes, and NVIDIA crushes on earnings. Like, I mean, that's, those are the three things we apparently can continue to look at. So what else you want to talk about here?
Yeah, here's one more amazing thing. So those revenues, we say it went from like 6 billion to 22 billion. That's without China. Their revenues from China were lower. China's not a small economy. You're not talking about like Singapore here. I mean, no offense to Singapore. China's second biggest economy in the world. And NVIDIA's like, oh, our sales from China sucked, right? I mean, because of U.S. sanctions, which makes the results even more incredible, I think.
Do you know by chance how much, maybe they don't even break this out, but what were their sales to China, let's say a year ago before they sang? I'm not sure either. But the bottom line again is they sold a decent amount to China, and now due to some sanctions and things, they're not allowed to, and it did very, very little to slow things down. I mean, I want to talk a little bit more. I mean, anything else? So net profits again up 872% from 1.4 billion to 12.2 billion. Earnings up 231%. I mean, it's just, I don't know.
Wait, say that again.
It's crazy.
I think we need to underline that. It's net profit is 12.3 billion. A year ago, it was 1.4. Wow.
Yeah.
That's what, 800, 900%.
Yeah. I mean, so what I have written down here, assuming I wrote it down correctly, but 12.2 billion from 1.4 billion, up 872. So it's like, okay, the stock's up a ton, but it's making an incredible amount of money. So listen, let's so we know in the video what they did was special. Sonu, you did an amazing, I guess I'll say chart. Sometimes I call them charts, but they're tables. Sometimes I call them charts. I mix it all together.
The table.
I just talk a lot, But you did an amazing, again, this is probably a chart for our Carson partners, and we put it in a blog that really put in perspective from the start of 22. Because think about 22 was the terrible time stock market performance-wise for the Mag 7. Then, of course, since 2023, it's been a little different, excluding Tesla, who struggled a little bit. But talk to us a little bit about, is it all about multiple expansion, all about dividends, all about earnings? Where is this growth coming from for, of course, Tesla, but the wrong one. Tesla's in there.
Tesla's in there
for
too.
NVIDIA, but the other Mag 7 there.
Yeah, and it's interesting we're talking about the Mag 7 because now it's been 4 years since the pandemic. It will be 4 years in a month, right?
Yeah.
So I break it down into two periods, and it's both a tech story in a sense, because the first 2 years it was about the pandemic winners, right? We're talking about Zoom, DocuSign, Teladoc, all of that stuff. ARC, we'll talk to Kathy Wood in a couple of days or tomorrow. If the podcast out Wednesday, we'll talk to Kathy about that, right? But then you had 2022, 2023. It was a Mag 7 AI story. It's like, look, NVIDIA's market cap was 570 billion a couple of years ago. It's close to 2 trillion now, an increase of 350%. But EPS, earnings per share, is up 389%, right? So what drives, if you look, you can break down stock returns into earnings growth. That's your E, and you can and multiple growth. And the way we look, a simple way to look at it is look at PE ratios, but forward PE ratios, next 12-month earnings and next 12-month PE ratios. So since the end of 2021, December 31st, 2021, through last Friday, NVIDIA stock is up 167%. And you think, oh my God, does that look like a bubble? Well, wait a minute. Earnings growth added 270 percentage points to that. Valuations actually dragged. It pulled it down, right? Forward valuations went from 58 to 25 times forward earnings, right? So valuations dragged by 103 percentage points. So 270 minus 103, that gets you to 167%. It's been a story of profitability, and literally for all the Mag 7 for that matter.
I was saying, look at the other six. It's of course, their stocks aren't up as much, but nonetheless, it's very, very similar. So believe me, there have been some well-known strategists out there saying Mag 7 in a bubble, Mag 7 in a bubble. And there are some parts that you could say feels a little bit like a bubble. I kind of agree. I was on the Compound and Friends. We'll talk about that very, very soon with Josh Brown. But Josh Brown said he thinks it's like a bubble in terms of how excited we are about these stocks. I mean, there literally was a countdown all day for the earnings for NVIDIA. So maybe there's a bubble in like the excitement for these stocks. But to say there's a bubble, I mean, certainly what you just said, most of the Mag 7 stocks, think about this, are cheaper than they were, I guess if my math is right, 26 months ago. 26 months ago, they're cheaper because their earnings have exploded along with the stock price, correct?
Yeah. No, exactly. And I think we'll talk about your session on Compound. And Josh made a great point about, is there a bubble in activity, right?
Yeah.
So is there a bubble in activity? So where do NVIDIA's earnings come from? A lot of it actually comes from Microsoft, Meta, Google
Yeah.
spending a lot of money on chips, right? Now you can, oh, is that a bubble, right? Essentially, that's CapEx, right? Capital expenditures. Are they spending too much? Now, presumably they know what they're doing, but that's not to say that, look, sometimes companies get it wrong. I would say maybe by the end of the 1990s, a lot of it, we saw the dot-com crash. There was a lot of
Sure.
capital expenditures, and a lot of that went bust, right? It didn't work out. A lot of firms lost money, but over time, all of us, I think, benefited from the fact that they were putting fiber optic cables in the deep sea oceans, things like that, right? So it doesn't go for a waste as such. Maybe there's a bubble in activity, and if I think forward, like, okay, what could pull this back, right? It's got to be your firms like Microsoft and Google saying, you know what, we have enough chips from now.
Yeah.
Right. But then I feel like and that's why the earnings call, the guy, I think I forget who it was. It wasn't Jensen, the head of it. It was somebody else talking about robotics and surgery, robotics across the board in industrial warehousing, across the board, right? All of that requires chips and a lot of computations, right? So, and these NVIDIA's GPUs, graphic processing units, are are what you need apparently to do that.
Oh, yeah. I mean, Jensen hinted that, listen, if you don't have one of ours, you're behind the times and you better buy one of ours. That's pretty much what he hinted at. Is jump on the bandwagon
he
or
would
don't.
say that.
Yeah, hey, it's working so far. But,
but hats off to him.
Yeah. Oh, absolutely. So that's a good discussion there. I mean, there's some parts that feel a little bubblicious, maybe, but to say they're blindly in a bubble, we'd say no, because there's earnings growth coming in. So let's talk about the market here. The scary chart that was circling around, Deutsche Bank put it together. They took a look at the top 10% of the top 10% of stocks. So like the largest 10% of stocks, what I mean to say, as a percent of the overall market, it's like 73%. Okay. So that's a lot. That's the largest 10% as a percent of the market since 1931, Sonu. So that's just the chart. I was on TV last week with Brian Sullivan from CNBC live in New York, and he brought that up. I'll just push back a little bit. I mean, you hear that like, oh my goodness, it's 1931. That doesn't sound good. Yet literally like last week, the advanced decline line on the S&P 500 made a new all-time high. The advanced decline line on mid-caps made a new all-time high. You've got industrials making all-time highs. You've got financials making all-time highs. You've got the IYT, the transports ETF making all-time highs. I mean, it's not truly, in my opinion, just a couple stocks going up. Yes, those stocks going up a lot, but there are a lot. And then one final comment on this, the equal weight versus cap weight, right? So the S&P 500 cap weight, sure. Apple's a lot in there. Microsoft's a lot in there. NVIDIA's a lot in there. That's an all-time high. We get it. But if you look at the equal weight S&P 500, it's only like 1% from an all-time high. The NASDAQ 100, all these big tech names flirting with not an all-time high, 52-week high. And you know what? It's only like 3 or 4% away on the equal weight. So to me, if that were like 10 or 15% away, I'd be much more worried. If advanced decline lines were not making new highs, I'd be much more worried, saying it is only a couple stocks going higher. So I push back on that, but still, these stocks are incredible, the size and the growth that they've had. You want to add anything to that before we talk a little more markets?
No, I don't know what else to say. Oh, you know what? I'll say this since we're going to talk about Warren Buffett. Berkshire is at an all-time high. Berkshire is not a tech stock. I mean, so
no, it's
the Nikkei is at an all-time high too. I mean, so I think there's something happening, except for Chinese stocks, right? There's something happening around the world. I think companies are putting together the fact that, you know what, maybe this next few years is going to be different from what we experienced after the great financial crisis. I think there's a bit of I don't want to say this time is different. There's a paradigm shift. I think that's too cliched, but still, it feels like there's something in the air. I don't know. I mean, especially with capital spending, all of that.
No, exactly. I mean, Germany, DAX is like making all-time highs. We're seeing headlines like Germany's in a recession. I saw headlines 2-3 weeks ago, Japan enters a recession, yet their stock market's hitting an all-time high.
There's no Mag 7 in there.
Right? Well, that's what I was getting at. Is there's not there's technology, sure, but these like industrials and different things make up a lot of China. No, wrong word. Sorry, a lot of Japan and Germany. Is what I'm trying to say there. So anyway, really interesting discussion. What's going on in NVIDIA and in terms of the market. Want to talk a little more markets, or you want to bring something else
let's do market. Actually, let's combine it because I know that a lot of new listeners. You want to talk about our positioning. So Brian, you and I, we manage our portfolios for our partners, about 350 plus partners, close to 50,000 clients, I believe, right now, somewhere there.
Yeah.
But you want to talk about our market positioning, like in terms of what sectors we like and all of that?
Yeah, I mean, we've been overweight. Longtime listeners know this, but we moved overweight equities December of 22, and we've been there ever since, and we still are. But in terms of just broad base, how we see the world, we still don't see a recession, right? We've talked about this a
Mhm.
lot. So we like areas like your industrials, your financials, maybe little pieces of energy, healthcare, which is not healthcare is a little more defensive sort of by nature, but there's some offensive plays. So to us, our underweights are your utilities and your staples and your real estate. If those things are lagging, which they have been, that's probably the market's message that things are strong. You don't really want leadership out of staples. Now, I'll be very clear. Staples led last week for 1 week, so we're watching closely. But broad based, we haven't seen that. Also, we're a little more neutral on technology. Communications see a little bit more opportunity, but those groups have had incredible runs. We're not naive to that, but we just think this rotation is a key theme this year. And your cyclicals, which do well if your economy does not go into a recession, should do better. And then small and mid, we're overweight small and mid. I mean, mid is probably what our largest outsized, oversized bet. It's portfolios, right?
Yep, exactly. I sort of combine both of them. I think mid is more correlated with small rather than, so when you talk small, you're kind of talking mid. But you mentioned the equal weight, right? The equal weight is actually, it's interesting that the equal weight S&P 500 is very similar. Like you look at the squiggles up and down on a price chart, it looks very similar to the S&P 400. And it's two different indices, right? But it's amazing how much they correlated to each other. But yeah, to your point, we like mid caps. We liked them for a while. Last year, you always think of, okay, what did we get right? What did we get wrong? Yeah, I wish mid and small had done better last year, but we still, look, there has to be some underlying intuitions, underlying logic to what, the way you invest. And I think, look, we don't see a recession. We see broad-based expansion and on trend, if not slightly higher than trend GDP growth. And you think small and mid should catch up to that story eventually.
Yeah, no, exactly. So good discussion there. So just let's talk markets in general, right? So we're looking, who knows where we're going to be by the time people listen to this, but we're up like 2% in January. So a decent start to the year. Now up like 5% or so in February, the time we're recording this. I mean, normally February is not that strong. Again, I think it's like, well, market's telling us something. Market is strong when it's usually not strong. That's powerful. So when you're higher in January and February, which again is not official yet, but we're almost there.
You knew I was going to ask you that. That literally was a question. You were traveling last week. I was like, when Ryan comes back, the first chart I want to see, or table, now we're back to, is it a chart or a table?
Yeah, who knows?
Like, what happens if January and February are positive?
This set the old Twitter X world on fire when I shared this one over the weekend. But when January and February are higher, the rest of the year, so it's the next 10 months, higher 26 out of 28 times, up 12% on average. The average year gains about 7% or so. So really outperformance. The next 12 months are going out a year, higher 27 out of 28 times, almost 15% on average. The full calendar year. Okay, so now this is somewhat, I'm not cheating is not the right thing because I'm telling the truth here, but you've already had some big gains the first 2 months. So it's likely the full year will probably be higher. The calendar year higher 27 out of 28 times. The only time stocks were down when you had a January and a February higher was in 2011 when the stock market was down negative 0.0%. So on a total return, you actually had a gain. So that's pretty incredible. Now it even gets better. Are you sitting down, Sonu? It even gets better.
Right.
If you're up in November, December, January, February,
wow,
like we're about to be. So a 4-month winning streak like we're about to have. The full calendar year, that would be the 2024 calendar year. Previous 14 times we've seen the scenario like that. The full calendar year higher, 14 out of 14, up 21.2% on average for the S&P 500. Again, that's not our base call. I don't think we complain too much. I do have one more if you're ready.
Okay.
We hit a big day on last Thursday, right? We hit an all-time high we just talked about in the video. Right, NASDAQ gained, NASDAQ 100 up over 3%. The S&P 500 gained over 2%, which we haven't had a lot of big gains like that lately. Usually bull markets kind of slow and steady. The last time, by the way, Sonu, we had a 2% gain on an all-time high was March 21st, 2000. Wow. That's a long time. People hear March 21st, 2000, like, oh, boy. I kind of did, too, when I realized that. Then I was a little calmer. I calmed down a little bit when I looked at this because my data found 1,287 all-time highs since 1950. Only
Okay.
24 of them, though, had a 2% return on that
Wow.
particular all-time high. So it's pretty rare to have big days on an all-time high. What happened next? A year after those 24, up 10.8% on average, median of 12.4%. Again, yes, there is an 87 moment in there. There's a 2000 moment in there, so it wasn't great. But there were several times when you start to get these, you continue to hit new highs, which is what we think. So I talked for a while there, Sonu, but I think some of that stuff's hopefully pretty interesting and powerful to tell the story that we are in a bull market. We still think we're in a bull market. We'd be a buyer of any dips or weakness. Anything you want to add on markets before we go forward?
I mean, the last bit about the markets going up 2% to hit an all-time high, that's so interesting because usually you get really big jumps like that in either direction in volatile periods, right? And volatility is actually coming down, which is what you want. I mean, in a nice bull market, you get like little gains, and then suddenly you look back 4 months and you're up 20%. I'm like, boom, right?
Where'd that come from? That's what we just went through, right? From the October lows, we just saw that.
Yeah. Exactly. Where did that come from? But the 2%, like, wait a minute, like, does that mean the next day is going to be a big reversal? The good news is we haven't seen that. Friday was not even Monday for that matter, and Tuesday, whatever is happening today, I haven't looked yet. So yeah, I think volatility usually begets volatility, momentum begets momentum. The nice thing is, we've had a lot of momentum, but volatility is coming down. And going to that 2%, actually, let me ask you. You've I think on a previous podcast you've mentioned February as a banana peel month for the. I always laugh when I hear that banana peel month for the markets. What do you think happened this month for February to be such a strong month this year?
Good question, because again, I always say if the market's doing something it's not supposed to do, it's when we listen. Like, I mean, listen.
I like that.
From October to April, that's usually the best 6 months of the year. Things should be fairly strong. It's normal. The 3 best months of the year are November, December, January. Well, gee, we gained a bunch then, so that's normal. But what happened now? I mean, listen. I think it's earnings. I mean, we're in the middle of earnings season, right. And earnings season once again surprised the upside. And it's just fascinating. And then I love to look at what credit markets are doing. We're starting to see some strength out of high yield relative to investment grade corporate. When you see these little clues taking place, it's like, okay, this is still bullish. So believe me, I was a little more cautious this time, say 2-3 weeks ago. We're still overweight. So okay, I'll take it. I'm not complaining. But I think it's just really, we need to be paying attention that when the market does something it's not supposed to do, which is rally. And I will also say this, we were bullish, right? Tom Lee, big fan of Tom. We're huge fans of Tom. Tom was bullish. JC Pretz, friend of mine, was bullish last year. All of us like, maybe there could be a little February weakness in the market, something where even the bulls who were bullish last year, I'm not saying we have egg on our face because we're still bullish structurally here. But it's interesting that the market just continue to rip higher. In the face of that, so it's pretty purely amazing. Anything else, Sonu, on that as we go forward?
No, do you think all the targets are going to move higher? Our friend Blake Mellard had a nice chart showing all the targets from the sell side, and then folks like Tom Lee as well. Most of them are clustered around 5,200, slightly below. I think it's UBS with the 5,400. I think what was ours? We said 12%. We didn't have a target for the S&P, but
I don't like targets. But 5,300 ish would have been ours, which is low single double digits.
Low double digits.
Low double digits kind of made sense to us. But hey, we might have to up ours too. But we're still overweight. I mean, I'm a strategist. I go on TV talk about this stuff. I hate giving targets. I mean, we're bullish, right? We're bullish. We structure our portfolios and models that way. Hey, I hope the market gains 25%. Hope's not a strategy. I get it, but we won't complain if that were to happen. So
let's not say the word hope here.
Yeah, well, that's true. There you go. That's true. Good point. Again, this is episode. There you go. I know what you're doing there. I know where you're going. All right, that's a joke between us. Anyway, all right, episode 74, Carson's Facts versus Feelings, sponsored by our friends over at White Charts. It's an NVIDIA world. We're just living in it. Sonu, I did see that Nancy Pelosi, again, no recommendations here.
Okay.
Remember, she bought the deep in the money calls on NVIDIA late last year. Yeah, she just bought deep in the money calls on Palo Alto Networks. Full disclosure, don't follow what Nancy Pelosi is doing. I'm just saying playfully, I don't know. Maybe she knows something because boy, she nailed it when she did.
Maybe she knows a lot of things. It seems like she knows more than something.
I'm just saying, Palo Alto's in her neck of the woods. I also say this: my son Gus was sick today, or is sick today. He had a fever last night, and I'm wondering any second I was probably gonna walk downstairs and be like, Dad, where's Mom? What's going on? So I've got Gus here. And if you guys could only see the room I'm in, so you see the backdrop on the YouTube channel, looks fine, right? I got a 130-pound dog snoring over there. My boys just have destroyed this entire basement. It's just pure filth everywhere. everywhere. I mean, look here. I'll just show you on the YouTube channel. Look, this is right in front of me, right here. It's like a Bengals. It's a Bengals Valentine's Day box, but it's just sitting on my desk. I mean, here, look, also on my desk, a Santa hat. I don't know why there's a Santa hat on my desk. It's just my kids have destroyed. Maybe I should. I don't know. Anyway, bring some gains. But it's just funny how destroyed my basement is. But you never know, because my boys played on here and destroy it. If you saw it, what's your desk like? My desk, I just showed you. I've got Bengals Valentine boxes and old school Santa hats. How's your desk looking?
I have a separate study, so the kids are. I mean, it's not like they're not permitted to come in, but they are. But on one corner, they left their Girl Scout cookies. So I have a big box of Girl Scout cookies if somebody is interested in that. No. And then, the rest of it is actually, I still have the bullhorns, by the way. Speaking of Santa hat plus bullhorns, and we should be off to the races.
If my boys ever were to leave cookies, believe me, they take cookies. They take cookies down here to eat, but it's like they leave the wrapper, they leave the crumbs. They would never leave a full cookie for old dad. I would love that. All right, so Sonu, let's see. What do we want to talk about next? Oh, my trip to New York. So last week I had the great honor to be invited to the Compound and Friends by the Ritholtz Gang. Last week, it's a weekly podcast where they have a different guest. Michael Batnick gave me the invite well over a year ago. Say, if you're in New York, let me know. And it just worked out that I was in town last week. So Josh Brown and Mike do this podcast. We'll talk a little bit about the podcast here. It's just such an honor and a delight. I've known those guys for many, many years. We all started doing this with social media many years ago, and kind of neat to see where our careers have taken us. But it was so neat because after that event, it was Josh's birthday. Josh's birthday was technically on Sunday, but he had a birthday party, and it was at the Hunt and Fish, I guess it's Hunt and Fish Club, but Hunt and Fish, the restaurant right there in Midtown. The amazing steakhouse. Went downstairs, and it was just an amazing downstairs bar. So many people in the financial world, the media world, Josh's world, right? It was so, you just turn around, there's Steve Leisman from CNBC. Talk to him. You turn around, there's so-and-so. It was just like a who's who. Cool. And it was just so awesome, and I was just so honored that they invited me, and I'm just so lucky that it all took place the same time that they had a huge birthday party. I got to meet so many new people and see a bunch of old friends that I knew. Like, we were joking, like in 2014, a lot of us were doing financial media and things like that at some different parties that Howard Lindzen used to have out in California. And we said it kind of felt like 2014 to get some of the old band back together. So it was really, really cool. And again, we hit some incredible jumps in this very podcast, Facts versus Feelings, like literally like record. Our previous record was one we had with Cliff Asness. Not surprising. Cliff's amazing. Our most recent podcast shattered that because I got to mention this podcast on their huge podcast. So it means a lot to us that so many people are downloading this and listening to this. And just I got a chance to hang out in New York with some awesome people. And thank you to Josh a ton. And thank you to Mike a ton for having me on your podcast. And the funny thing, the very next guest after me, they just dropped it, was Eli Manning. Now, before we go any further, Sonu, who is Eli Manning? Sonu's like, who's Eli Manning? Do you know who he is? Okay, I even said, stop talking about it. We're going to talk about it live on the podcast. He's a very famous quarterback who won 2 Super Bowls for the Giants. He's literally one of the most famous people in the world. And Sonu's like, who's Eli Manning?
Yeah. Look, I did go to grad school. I did spend 6 years in Indiana, so there is that connection to his brother. So I didn't know, but if you'd asked me to guess which team, I would say like New York's very confusing. Jets, Mets, Nets. I don't know. I mean, pick one. Like, do they all have to sound the same? I don't mean to offend any of our friends in New York. No offense, please. I mean, I'm just kidding.
I know the Jets fans are long suffering. The Giants fans have had some good years, and the Jets fans are long suffering. So hopefully that changes for them.
And which one's in New York was, New Jersey? No, forget
that. I'm not sure. Yeah, it gets confusing too. But it was an honor, and then I was followed up with Eli Manning on their podcast, which is amazing. So awesome. You listened to it. I don't want to spend too much time on this, but I did it for 93 minutes. It was a blast. But one or two things that stood out to you, maybe we can talk about from that discussion. I
learned that I'm 44 years old. We both, so for everyone listening, both of us are born in 1978, and then Ryan figured out age would be 44 years old. So I was like, I like that. I'll go with that.
Well, they asked me how old I was, and I mixed it up. I said I planned for everything. I mean, I worked for 3 weeks getting ready for this discussion. I had everything under the sun, and they asked me how old I was, and I messed up. Okay, I didn't. Literally, as an old set, I worked at a previous shop. One time they asked me, what it stood for, and I literally didn't know. I mean, believe me, I won't get into it, but I prepared for everything possible. Sometimes you get that curveball. Who do I work for again? I kind of went blank on live TV who I work for, but that was a past life. I don't have that problem. I'm at Carson Group now. I know that much. Just look behind behind me, right? Look on the YouTube channel.
Yeah.
So that was fun.
That was
What
great.
else? What else?
It was great. No, thank you to Josh and Michael, and thank you as well for promoting. So, one thing that struck me, they're just such nice guys. I mean, like,
Yeah.
I'm not saying you can get, I won't use a word, but it's not often you see that in the world of, the world we live in finance and investing and all of that. So which is not to say there aren't nice people, there are plenty of nice people, especially at Carson. But no, it really struck me that they just seem like very generous people. So that's awesome. One thing, Josh mentioned this, and this gets to the whole thing about, Ryan's a perma bull, right?
Oh, yes.
Now, let's talk about that. Like being a perma bull, and maybe me too. And I confess that I'm very bullish on the economy as well, right? And you're bullish on markets. We are bullish on markets too as a function of that. But Josh had a good point. Like, can you not be a perma bull? Because like a lot of our clients are invested in equities, right? So that struck me that can you, like, even if we were bearish, could we come out and say it, right?
Yeah.
And one thing I would note there is that you and I manage several kind of portfolios. It's not just we have a strategic portfolio, we have tactical portfolios, and at Carson, our goal is to give choice, right? We run unconstrained portfolios, so we can be 100% equities, it can be 0% equities, and there have been times, but Ryan, in 2022 we were maybe close to 50-50 or 60-40, something neutral, right? That's our benchmark for the unconstrained portfolios. And a lot of most of our clients actually are not invested 100% in equity. It's mostly probably in moderate portfolios. And so they've kind of already wrapped their head around the fact that, markets are volatile. What's the thing you like to say? Oh, yeah, volatility is a toll we pay to invest. Right?
I say a ton of stuff. I don't know. What do I say? But exactly, volatility is a toll we pay to invest, because again, it's a fun ride, but to get where you got to go, you got to pay sometimes.
Right.
With volatility. And
so you diversify. Of course, bonds haven't been the best diversifier the last 2 years, but historically they've been that. Most people 60-40 portfolio. And we've also run that as for the bond side. I mean, last year, I think we've talked about this before, that one of our biggest calls, yes, we were bullish on equities, but we were bearish on bonds, right? And so we were heavy overweight cash. We were underweight what we call duration. We didn't want long-term bonds. We wanted short-term. We're like, cash is paying 5.5%. Why take more risk?
So I'll jump in there, because what Josh pointed out is, listen, they're an RIA, we're an RIA. We always kind of, look to the idea that, listen, markets usually go up. I mean, 3 out of 4 years, stock market does go up. There can be years like a 2022 that smack you in the face and don't go up. So you have to remember that. But I think what you just said is a key concept. We can kind of slide and move around. If we were quote unquote bearish, right, we wouldn't just say get out of all stocks, right? We would say that. We would say, hey, look at utilities, look at staples, look at healthcare. There's some more defensive areas. I mean, 2022 was a horrible year, but you know what? Energy did great. Go back and look at 2000, 2001, 2002. We remember this vicious bear market. You know why? Because tech and high flyers were killed. Value stocks did fairly well. Small caps, all in all, did fairly well. So there are some areas that we can move to. So we wouldn't ever just say, get out of all stocks, go buy gold. Right. No, we're not going to say that. And we do have a small sliver of gold, actually, in some of our tactical models, just in case we, have some issues out there. But the big picture is, I think it was a great point by Josh. Listen, at RIA, you tend to look longer term. And I've done this for over 2 decades now. And I mean, some of the very best investors I've ever met, and I mean this, when I go travel the country and talk to people that come up to me and say, I've been doing this. I've been investing for 30 years, and I just every 2 weeks put money in my 401k. I don't care what the news is. I put money in my 401k every 2 weeks. And those, I mean, there are some wonderful hedge fund managers out there. Don't get me wrong. But those are the best investors that over the course of decades, some people when market was down a lot in 2022, like, what are you doing, Ryan? What are you doing? Looking for some secret for me to tell. And you said, you know what I'm doing? I'm putting more in my 401k right now because I know I can max it out at a certain level. I'm putting more in when we're down 20-25% than if we're hitting all-time highs, because that was an opportunity, because I know I don't need that money right away. Hopefully I don't need it for a long time, right? So I think that's kind of a great question, and no true easy answer other than we absolutely can go more defensive, but we're not seeing that. And I think what's so neat about our team working at Carson is we'll have the flexibility to do that. Someday, hopefully we're here long enough and do it. Maybe there will be a time that, boy, the economic data is weakening, technicals are weakening. Maybe we should become more defensive. Again, it doesn't mean we're going to say sell all stocks. There's different areas. Like you mentioned, fixed income. We thought yields would go higher. We didn't like fixed income all that much last year. Hey, we went into, high yield. High yield did okay last year, especially relative to long-term treasuries. Okay, is beyond the word. It did fantastic. So great discussion. discussion and definitely something for us to think about. Good news, we think we're at least one other couple of years to go, hopefully a major secular bull market, so we don't have to think about it yet. But trust me, the data changes, we're going to change our opinion, sir.
Yeah.
What do you do, right? That's the old quote. Anything else you want to add there? Because we've got about 10 minutes. I got a TV hit coming up. I'm looking at the clock here, so we've got 10 minutes.
No, we good. I think the onus is always, it feels like the onus is always, oh, Ryan, explain yourself. Why are you bullish, right? I feel like the onus should be on the bears. Like, somehow, I think Ben Carlson had this in one of his blogs. Like, it sounds smarter to be bearish. But, the reality is historically, like the odds favor being bullish, right? So the onus should be on the bears to like explain your position, please. Right?
Yeah. Well, yeah, it almost sounds like you're on the same side. Hey, come here. I want to tell you something. Like, this market's about to go straight down. I want to be your friend. I want to tell you something. Versus, oh, you know what? Valuations are good. Earnings are solid. Oh, by the way, productivity's high. The stuff we look at. Macro picture's good. Fed might start cutting. Market's going to go up. It's like, well, wait a minute. No.
I don't believe you.
Janet Yellen. I heard Janet Yellen has this magic button she's pushing to make the stock market go up. I heard that we're just printing money. No, actually, no. The size of the balance sheet's been decreasing. But whatever. It doesn't matter. Well, it matters. It matters a lot. But I'm just saying, it doesn't matter to certain people, because you can tell them the facts. They're not going to care. They have their opinion. That's fine. Fortunately, if you're listening to this podcast, hopefully it means you're agree with how we look at the world. We don't have to always. Believe me, I hope you don't agree with this all the time. Our team, we don't agree all the time. We'll be very clear there. But big picture, we just think there's still a lot more reason to be positive than negative. All right, Sonu, we've got 10 minutes or so, because again, I do have a hit with BNN, which is Bloomberg up in Canada.
All right.
So that'll be fun. So let's see here. We wanted to finish things up with the Warren Buffett letter, and then I'll also talk a little bit about Japan. You dug into the Warren Buffett letter. It was great. I do want to read one thing. Give me one. Well, first off, what'd you think of the letter high level? I'm going to read what I want to read, and then we can
it's always a great read. The one thing nice is, like, I don't mean this in a bad way, like to put down my wife, but my wife could read it and understand it.
Yeah, you better be real careful what you're about to say, Sonu. This is recorded.
She is not.
This isn't just you and I talking, buddy.
She's not in the investment business. I mean it in that way.
Right,
I don't mean it in the fact that she's not intelligent. By no means. She's much smarter than me in several ways, more ways than one. But yeah, no, she could read it. He explains things. He explained EBITDA in a nice way. I don't think I could ever do that. Forget. I'm not even going to say what EBITDA is on. No.
Well, and I think that's something that we try to do. Believe me, we're not in Warren Buffett's camp. I'm not saying that, but to take the complicated, to make it easy to understand.
I think you do that especially really well.
Thank you. I try to do. Einstein quote, going to paraphrase it, but if you can't explain it to a 6-year-old in 10 seconds, you don't understand it either, right? That's a paraphrase, the Einstein quote, but that's the guts of it. But here's a really cool thing Warren talked about. So obviously Charlie Munger passed away. This is the first letter he's done since Charlie Munger is one of his, I assume it's one of his best friends. I think he called it his best friend and long time confidant and right-hand man. He told him in 1965, Charlie told him, Warren, and then I want you to tell me what you think of this. I know you've got some opinions. Warren, forget about ever buying another company like Berkshire. But now that you control Berkshire, add to it wonderful businesses purchased at fair prices and give up buying fair businesses at wonderful prices. In other words, abandon everything you learned from your hero, Ben Graham. It works, but only when practiced at a small scale. So talk to me about that idea, again, of buying, fair businesses and fair values and good businesses, good values. What did you learn when you thought about that a little bit, Sonu?
Especially being someone who does quantitative research and all of that, you do, both of us, right? Mm-hmm. We like to look at stocks in terms of, okay, broadly speaking, what you forget. One way to categorize stocks is by sectors, right? Oh, yeah, tech stocks, yeah, staples, things. Another way is what we call factors, right? These are stocks that share common characteristics. What are the common factors? Value stocks. These are cheap stocks, stocks that have less volatility, right? There are high quality stocks that are profitable and stable with high payout ratios, things like that. So from literally what you read, it's almost like Munger told Buffett, look, if you just look for value stocks, really cheap stocks, you're not going to get very far because there aren't too many opportunities like that. Instead, focus on quality, focus on low volatility, safe stocks, and value at the same time. So you go to a multi-factor approach in a way. All right. So that's brilliant. And so essentially, like, long story short, what did they do? They did low risk, cheap, high quality. Right. That's what they've done over the last 40 years, just as Munger advised. Right. But here's the thing. That isn't the only key to Buffett's wealth and success, right? If you look at it, and this is what I put in a note yesterday, I'll put a blog on it tomorrow or today when this podcast comes out on Wednesday, right?
Good.
The 28th. Mm-hmm. So yes, they did safe, cheap, high quality stocks. That would get you a long way. Probably does better than the market over the long run. And we've seen that, like for folks like AQR have put the numbers there. But he's also taken leverage. He's levered that 1.6, 1.7
But
times.
Sonu, he's got a ton of cash sitting there. Somebody said he's bearish because there's a ton of cash sitting there. You're saying it's not so simple?
No,
You're saying
it's
not so simple?
Exactly.
Yeah.
He's levered.
Right.
Now, here's the thing. So that's point two, right? So he's focusing on safe, high quality, low risk stocks, and then he's levering it up. So his portfolio is actually more volatile than the S&P 500, right? Historically, Berkshire's volatility has been about 23%. And what is 23%? Well, the market volatility has been about 15, 16%, right?
There you go.
So it's a more volatile portfolio.
Mm-hmm.
So bigger drawdowns, things like that. And everyone's, I think, seen that and say, oh, Buffett sucks now because he's in a 80% draw, whatever it is, right? But the other thing is, if you and I went to lever up a portfolio, say we had $100 in Apple stock, you went to Fidelity or Schwab or whoever, right? And ask them, can we borrow another $100? They'd be like, oh, you have to pay us 6%, like margin rate, right?
Sure.
Buffett doesn't get that rate, by the way. He levers it. He gets really cheap financing. That's because he's got an insurance company.
It's who you know. It's who you know, right?
So he's got an insurance company. What he does is he calls it float. I mean, he's got a great explanation. I don't think I could ever do as much justice to explaining float. Essentially, what he's doing is collecting insurance premiums, right? You and I, property, casualty, all of that through Geico, we pay insurance premiums. And, the payout, the claims are not due until much later. So he can invest that money in the meantime, right? So that's why he's got cheap financing as well on top of it. So he's taking leverage and he's doing it at cheap. Historically, his financing costs have been about three percentage points below treasuries. That's unbelievable. Wow. For most people, it's above that.
So I've talked before. My daughter just turned 16, started driving. My car insurance went from $2,100 to $4,500. You're telling me I'm helping Warren Buffett leverage with the more money that we're paying.
Exactly.
By the way, before I go further, this is episode 74 of Carson's Facts versus Feelings. Let us know how we're doing by leaving a review or giving us a like. Don't forget to subscribe if you want to hear the latest. And then we mentioned the 28th, the 29th this year, Leap Day. By the time everyone listens to this, hopefully it'll be very close to Leap Day, but we've talked a lot. We are doing a very special live stream edition for 4 hours of Carson's Facts versus Feelings this Thursday. People say, how can we sign up for it? CarsonGroup.com/Leap Day, or simply go to my X, Sonu's X, my LinkedIn, Sonu's LinkedIn, or any of the Carson streams for a live stream for 4 hours of fun starting at 10 o'clock Central Time, 11 o'clock Eastern Time. Top of the hour is a guest. Sonu, hopefully I can get this right. I always seem to forget. I just know I got to sit somewhere for 4 hours. We have Dan Ives first. We have Kathy Lee second.
Kathy Wood.
Kathy Lee. Jeez, Kathy Wood.
I think Kathy Lee is a chef. Maybe at some point we should have a chef on.
My stomach is growling. Apologies. It's only Kathy Wood, like the largest name out there. Kathy Wood. Sorry, Kathy. I'll apologize to her. Kathy Wood, and then Libby Cantrell is going to be, I guess, is that the cleanup hitter? And then that's on deck. And then the final hitter, the cleanup hitter, is who's that going to be? I know we're excited. Everyone's favorite macro. You want to tell us who it is?
Neil Data, person. The person's got it right and still getting it right, I would say.
And he was just on a Disney cruise. So I cannot wait to ask Neil what the Disney cruise was like. So we've got only a couple minutes. Unfortunately, I do have to hop for a TV thing. Let's talk about Japan for a minute. The Nikkei making new all-time highs for the first time since I believe it was like December 30th, 31st, 1989.
December 29th, 1989.
Is that what it was? Okay,
yeah.
So right then, Buffett on his 90th birthday actually bought like 5% of his portfolio for some very large companies. In 2 or 3 minutes, let's talk about Japan hitting new highs, but how Mr. Buffett once again outsmarted everybody by buying Japanese stocks about 3 to 4 years ago before they're hitting all-time highs. And wrap it up in 2 or 3 minutes. I do have to go.
Everything we talked about, like his stock picking skills, the leverage, and cheap financing, it all came across in this letter with this Japanese stocks call, right? They paid off handsomely. I mean, since August 31st, 2020, which is when he started with a 5% stake, now he's got a 9% stake, through the end of last year, all these 5 stocks, Marubeni is up 310%. That was doing better than NVIDIA, by the way, right? Mitsubishi 200%, Mitsui 216%. Just go down all of them above 100% gains, right? Now, how do we do this? The one thing is, if you and I go buy foreign stocks, we have to first convert our US dollars into yen, if you're buying Japanese stocks, and then we buy Japanese stocks on the Tokyo Exchange or whatever. Now, the yen goes down, that's a big hit, right? And that's what the yen's gone down 50% over the last 3 years or so. But Buffett didn't, he literally said, look, I don't know what currencies are going to do. I don't want to be exposed to that. So what did he do? He went and borrowed yen from Japanese investors. He borrowed it. He basically sold the bond. He's like, I need money, folks. He's got, keep in mind, this guy has a huge cash hoard next to him, right?
He's got some dollars sitting there. He's got some dollars sitting there. But he wanted some yen.
No, I'm not going to spend that. And I'm going to borrow yen. And what happens? You have to pay the interest in yen. You have to pay the principal back in yen. But his company is earning revenues, all that in US dollars. Yen crashes, so he's sitting pretty.
Exactly what he wanted, by the way. He wanted the yen to go down.
But that completely hedges his currency exposure on the stock side, right? So he's got leverage. I don't know, like legend, genius. There's no superlative I can use beyond that.
Yeah, I mean, the companies he bought, I'm doing this because I think it might be funny. I'm going to butcher these names so terribly. Marubeni, Mitsubishi, Mitsui, Sumitomo, and Itochu. I believe those are some things I've ordered at Japanese steakhouses before, but they're also some very large companies that have saw soaring gains.
And they're not the Mag 7.
No, they're all well over 100% since he purchased them back in, I guess it was August of 20 is when he purchased them. Nikkei's up over 55% the same period, and the S&P 500, 44%. He literally picked a company doing better than NVIDIA until just recently. I mean, think about that. So everybody, we're going to wrap things up here. We really hope you join us this Leap Day, which will be a lot of fun for 4 hours. Like we already talked about, should be an awesome discussion. Going to learn a lot, going to have some fun. Sonu, this is a great discussion. Thank you so much to you for bringing the A game as always. I'm going to go talk to Bloomberg News here in a minute and try to bring the A game. And thanks to all the new listeners, as we know there's a lot of you out there after the Compound of Friends thing that I did last week, which was great. Hopefully people enjoyed our podcast, and we're just going to continue to grow this thing, continue to do it. Sonu and I do it weekly. We have a lot of fun. And everybody, this is episode 74, brought to you by our friends at White Charts. We'll see you hopefully this Leap Day. Take care, everyone. Goodbye.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.